Have you ever asked yourself, how can the Federal Reserve print so much money? 50 years ago, in 1971, Nixon signed an order taking the dollar off of the gold standard. He closed the gold window. Why would he do that? And why would the Federal Reserve back that up? More importantly, how does that relate to today? And how could that affect your retirement? Many would agree that Nixon is best known for the Watergate scandal. One of the main motivators for Watergate was to ensure winning elections. What most people don't know is that Nixon was making many other moves. One of those moves was to juice the economy. He knew that when people felt economically strong, they tended to vote for the current president and put him back in office. So in order to juice the economy, he needed to print more dollars. But he couldn't do that if the dollar was tied to gold. So what did he do next? He took the dollar off the gold standard, leaving room for the Federal Reserve to start printing money. But it wasn't just about printing money. He also wanted the Federal Reserve to reduce interest rates, so that way the money would get into the economy. And that's exactly what they did. And what followed was the inflation of the 70s. The consequences of removing the gold standard go far beyond the inflation of the 70s. Let's take a look at the economic effects over the last 50 years. What's interesting is if we look at housing, the average cost of a house in 1971 was around $25,000. Today, the average cost of a house is close to $375,000. So if you do the math, you'll see that the price has gone up about 15 times. During that same period, gold has multiplied 51 times. If you had invested $25,000 into a house in 1971, you'd have around $375,000 today. But if you had purchased $25,000 in gold, you'd have $1,275,000 today. Part of the reason gold went up in price during this period is because gold often has an inverse relationship with the dollar. If we look at the dollar over those 50 years, it has lost 88% of its purchasing power because we're printing so much money. How does that relate to what's happening today? We are seeing a lot of big government spending programs, many of which are about appeasing the political base. Since March 2020, we have printed more than $4 trillion, doubling the money supply, and we have returned to 0% interest rates. Once again, we're seeing inflation starting to roar. Interestingly enough, when this happened in the 70s, the Federal Reserve's talking points were that inflation was transitory. They were wrong, as the Federal Reserve often is, and inflation lasted more than 10 years, hitting double digits. Now, Chairman Powell and the Federal Reserve once again are saying that inflation is transitory. Let me ask you, do you trust the Federal Reserve? How long do you think inflation will last this time? How bad will it get? If you were wondering how the Federal Reserve can print so much money, it's because money is only worth paper. It does not have the value of any gold in it. The only thing that has the value of gold is physical gold. Today, with politics and the Federal Reserve printing so much money, they might be causing the collapse of the dollar. The only thing that's important in your retirement is your purchasing power. And if you can't count on the dollar, you certainly can count on physical gold and silver storing value. Call Augusta Precious Metals today and request our free guide. Better yet, book a one-on-one web conference with me or one of my educators so you can learn more about physical gold and silver. If you've enjoyed this video, share it with your friends and family so they can learn more too.